Welcome back, investor. We've got another episode of Passive Income Adventures. And today we've got Caleb Christopher on the show. He is a cybersecurity specialist who is now running a title company and does a lot of creative financing. And this is something that touches me personally because a lot of our early deals were structured very creatively. Uh, Finding a title company to do the documents correctly, maybe not quite understanding exactly what I was doing and needing an experienced guide to bring me along and help me avoid some of those pitfalls. And then some of the cybersecurity practices we've seen at title companies over the years. My husband's a former IT professional, and we've just been really kind of surprised at some of the things that happen at IT companies on the security level. So Caleb can kind of speak to that, but mostly to the passive income side of things. I know on the show we talk a lot about investing in other people's business is the only true source of passive income, like buying a stock on the private market. And then you have various degrees along the spectrum of what passive income really is. You're running your own business, but you can hand it off to people eventually, residual income, royalties, things like that, all the way down to being a silent partner and then to a limited partner buying true security. And that's what passive income is. And so Christopher is really able to talk about how real estate, creative financing through real estate can bring sources of passive income, but also it can bring a business along with it, and knowing where that line is and what to expect there with the amount of work that you're going to need to put into making the income that you're making can really be a huge consideration for people. So we're going to talk to not only the people who are running this type of business, a real estate business using creative finance, just basically like helping to get private loans rather than using bank mortgages and things like that, to also the person investing with that operator who's maybe you're the private money partner. And you need to make sure that the person you're investing with knows what they're doing and that they also are able to structure things correctly, competently. So, you knowing about how to run your own business or understanding the person you're investing with knows how to run a business. So we're going to talk about all those things today with Caleb. Thank you for coming on the show, Caleb.
It's a pleasure to be here. Can I say, good golly, what an intro? It's like, seriously, listening to there's so many moving parts to the cloud of possibilities, and the lingo you use indicates you have depth of knowledge in each of the areas you spoke of. Well done.
Well, I mean, a lot of times I'll have people on the show where they're talking about something I have no idea what they're talking about. And I use it, like I say, my selfish way to ask questions to learn about things that I'm interested in. But I feel like what you're dealing with is something that I used to get started with my real estate business. And then we scaled and got into commercial stuff, which I'm still using creative financing and some of the smaller mom and pop commercial stuff. And now that we're scaling back down to be
Yeah.
more retired, we're kind of back to this because we're now buying rentals on our own again and less partnerships, less complexity. And so I feel like it's something I've seen in my life cycle of real estate. I know a little bit more about it, but I realize as I was looking over your bio that there's still so much that I don't know and so many pitfalls that I really like to help people kind of figure out how to structure these things and invest in people who are structuring these things as a source of either income from a business or passive income. So really appreciate you coming on and educating us. Let us start out with your background. I mentioned the cybersecurity. You've got the real estate investing experience and the entrepreneur experience. Kind of walk us through your professional development. Maybe start back, where it began and catch us up to what you're working on today.
Yeah. I first started swinging a hammer.
Yeah.
I was on a rehab team. So I was on a rehab team for high end, not flip. Well, yeah, they weren't flips. It was the owner having the place rehab. So I saw inside of walls. I learned construction, a general trades person, and then I shifted to working in a prison. And so I learned physical security there. And then I shifted to IT and I upgraded from IT to cybersecurity. And so I learned cybersecurity. And so I have a lot of these. I've got familiarity with real estate and I've got a lot of security principles. I ended working at the prison as a supervisor in the segregation and mental health units, alternating officer in charge. And so I had to understand policy. And where I think one of the biggest lessons for me as I worked at the prison system was that policies indicate management intent, but you have to have a line level manager who can interpret policy and understands when to apply and when not to apply a certain policy. You can't apply it so rigidly that um, it just doesn't work if you apply it that rigidly. So that was interesting to learn about the level of discernment that they expected, because if you gave perfect answers on the exams, you would never promote. So that
Mm,
was really interesting to me between idealistic security and practical security from the
yeah.
physical standpoint. And now when I took that into cybersecurity, it was the same thing. Like, secure is not a destination; it's an effort, and it's hard to measure ROI, return on investment for that. And um, what was I going to say on that? It comes down to what's practical, and it's kind of like the bear scenario. You only have to be faster than your friend. You
Yeah.
have to be not the unless you're a specific target of somebody, you just have to be not a great target of opportunity, not the lowest hanging fruit. And so the appropriate amount of spend on security is up to you and your given situation. So I learned a lot of subjectivity, a lot about setting standards that are and working with people who understand, who've got good judgment, basically.
Mhm. Yeah.
And
Well,
from
yeah. Having good judgment, that subjectivity. My husband used to say that he did developer operations, and so the cybersecurity that happened for those developers to get their work done is that I want to put everything inside of a black box and bury it in a trench on the bottom of the ocean, but then none of the developers can access it. And so there's this ease of use and convenience that you have to weigh against security. So all security has holes in it because it has to be convenient to use. It designs friction into the system on purpose, but if you put too much in, it becomes so difficult to use that it's almost useless anyway. And so that discernment, that judgment that you're talking about, that trade-off between security and convenience or ease of use, that teaches you that people have to use their brains to be able to figure out where this line is, and it's always moving. These trade-offs are always happening, but that gives you discernment on people, not just tech systems.
Yep, absolutely.
Yeah.
It's real life involves real people.
Yeah.
The people are you can't design a perfect system because people have to use it. And every
Yeah.
point of friction you add, behavioral economics is a whole school of study that I just it fascinates me. And when you make something too hard, people will find a workaround, and it's not going to be one you wanted. And
Yeah.
so if you set this policy and you start enforcing it, and they start going around it, now what? You got to shift things. So yeah.
Well, where did that shift happen for you when you were working, like you said, in prisons and cybersecurity? You'd already done the construction part of real estate. Tell us about your first couple of deals where you were the owner and when
hmm
you started getting into true creative financing using private money. Or, well, I mean, I guess you could start with how you got there, but then define creative financing for us along that journey.
Oh yeah, for sure. The beginning was when I became an accidental landlord.
Yeah.
I
Let's learn
refinanced
more
the
about
house.
again.
It's classic.
Yeah.
So that's not really passive income, but that's me getting into real estate. I became an accidental landlord, and then I read Rich Dad Poor Dad,
Okay.
and then I was like, thank God I did not sell that house. I'm building wealth. Yes.
What?
So I now have an asset. Look at me go. And I've only got 2 kids, and a third one on the way. So that was at the time, and that's how I got into real estate in the first place. So my first deal was accidental landlord. After that, I was still working cybersecurity. I found creative finance as a subject, and I just consumed everything I could on the internet about it. I was like, this is my people. This is my topic. I want to know this. And so I joined a mentorship to learn creative finance and ended up working as a fee only, like you only get paid if you close the deal,
Mhm.
lead manager on a wholesaler's team. And I was just doing creative close. And so my first deal was what was that? Oh, 5-year lease option.
Okay.
And then I did sub 2 deals after that. So that was where I started getting into things. I really like the complexity, and in creative finance, which I'll define in a second. My favorite thing about creative finance is you can actually help people. A cash deal is a cash deal. If you can do that, do it. Go hands off, get done. You don't have a relationship to manage. There's nothing. It's simple. If the price works, you do the deal,
Mhm.
and then it's free and clear. Partnerships are entanglements. So are sub 2 deals or other creative finance structures where they're still stuck or attached to the deal. That's an entanglement, and entanglements can trip you up.
Yep.
Now, later, maybe a long time later, maybe really bad. Who knows? So I really like helping people out, but I also appreciate the simplicity of just get the deal done and break ties. Those
Yeah.
are clean. Now, creative finance. I would say in real estate, it is buying or selling real estate without involving institutional funding.
Okay. All right.
That's hard money. I don't count a hard money lender. I wouldn't necessarily count a private money lender as creative finance, sub 2 and seller finance. I would. if you're obtaining the asset using that creative financing method.
Yeah.
And sub two, is everybody familiar with sub two around here?
Probably not. I know when
Okay.
the first big podcast I did, I was talking to about a subject to mortgage that I took for my first investment. And the host had to kind of slow me down and say, wait. Because I was talking about a lot of creative financing. And I just thought, oh, well, this is like every real estate investor knows about this, right? They're like, no, this is kind of some beginners that we got. So define what you mean. I had a subject to, and then I wrapped a mortgage around it and all. So um, creative financing to me is any time that you don't just say, I want this house. I'm going to give you this money. I will extend that to say you use a bank, some sort of institution, a business that is loaning you portion of the money. That's all traditional financing. Anything you do that's outside of that, like I'm going to pay you in installments, I'm going to take over your mortgage. There are lots of ways to do it. 250 tools and 5,000 different situations, right?
Right.
But anything just beyond that, I want this thing, I'm going to give you this money for it, and involving like one bank, one lien, that kind of thing. I would say traditional. Anything beyond that, you're starting
Or
to
your
get,
cash. Yeah.
yeah, you're bringing in the HELOC for the down payment. I think that's kind of borderline
Yeah.
creative, but it's certainly creative if you're using like a money partner's HELOC and then a bank over here and all that. So, um, what's the what's the simplest form of it? You mentioned subject to. We've mentioned that a couple of times. Define that real quickly because I feel like that's
Yeah.
almost like a gateway for a lot of people.
I agree it is. Subject to is buying a house subject to the existing mortgage. And I mean, you've bought and sold real estate non sub two, haven't you?
Yeah.
Okay. But anyone who's ever bought a house, and this is the way I describe this, everybody has bought and sold sub two. When you buy a house and 6 months later the utility company comes and digs up your front yard chasing something down, can you say anything about it?
I
Can you like can
mean,
you
but
can you sue them for digging up your yard?
no.
Probably not. Probably because they're using a right of way or an
Easement.
easement or some other thing that came attached to the title of the property. You bought the house subject to
Something.
rights of way,
Okay.
lien, encumbrances, whatever. What we're doing is every deal works like that already. All we're doing in creative finance sub two is we add the existing mortgage to the list of sub
Okay.
twos. And
Okay.
so when I buy I buy your house subject to the existing mortgage, I'm agreeing that I don't have any claim on you or anybody else, and title insurance won't cover it if something happens with that mortgage that's recorded against the property and it affects me negatively, financially or otherwise. I'm buying it subject to the rights, remedies, risks, limitations, all contained in that recorded deed of trust or mortgage against 123 Main Street as of the date that I bought it.
Okay. Can you tell us what title insurance does in some situations where title insurance might have to kick in?
Mm,
Because we all buy it.
ifs.
I've never used it.
Yes, I know. I own a title company and I'll go on record. I'm a little dubious about title insurance, but it's one of those things that the risk is really low. If
Mhm.
we're good at doing our job, the risk is extremely low,
Okay.
but the potential for loss is extremely high. And so
It's
why would you not? So I can't really shake a stick at it, but I can't wave a banner in favor of it either. I'm not going to champion title insurance, but
I
I would
most
expect most people to get it most of the time.
yeah, and it's super cheap. I figure it's like I've seen some fraud with title, people saying they
Yeah.
hold title to something they don't hold, things like that. I don't know if that would be one of those situations, but I've seen
Yeah.
enough this or heard enough stories from my fellow investors to be like, just buy it. But what I rely on a title
Yeah.
company more for is the legal structure of the deal itself. One of our partners on one of our commercial deals, he taught a creative financing, like a course, like with a podcast. He's retired now, but he would talk about just things like, oh, the new arrangement didn't include property taxes going up over the years, and so now it no longer makes any money because property taxes went up, but the original one does have to cover it. So you can't charge the person more when those go up. Little things like that.
Yep.
What do you see? Like, what are the major red flags? I mean, if you know, like the number one biggest mistake people do when they structure some sort of creative financing deal, it's like, oh man, this is a big one. People make this a lot. Don't do this. Is there one big one, or is it just a collection of little red flags?
It's the collection of little ones. The big
Okay.
ones are going to be obvious to even a lot of laypersons.
Okay.
But the one you mentioned is a little one of those devil in the detail moments, right? Your contract, your 14-page contract or whatever that was, didn't include this one little thing to allow for ABC. It's the collection of lessons learned over years of experience that really does it. I do want to challenge something though. I wouldn't be relying on a title company to make sure that the deal is structured right. In
Oh,
fact, they're
right.
supposed to be an independent third party. They
Yes.
can say, I won't close this unless this and this and this are true, but they
Yes.
should not be advising any party, hey, you should be doing this. Like they're incurring liability if and when they do that. And I think there's a lot of title companies that mean well,
Hmm.
that may do some of that because they mean well, but they're also taking on some risks and they're not supposed to be doing that. I had a title attorney once
Yeah.
telling a seller that this was a bad idea for her. This was
Oh,
me buying on seller finance. A wholesaler put the deal together. It didn't work. It was falling apart. And I said, if I knew the seller needed help, I said, I'll bring $30,000 flat, period, end of story. Subtract closing costs out of that. I'm not bringing a dime over 30,000. And then the rest of the thing can stand, right? So 0% interest. She was selling it above market rate, getting 30,000 minus closing costs as cash up front, and we had flat payments that are pretty attractive. And I was getting 0% finance. So that's an exchange of value. The closing attorney, who's supposed to be independent, effectively started representing her, telling her what she
yes.
should and shouldn't do and what she should and shouldn't include. I said, hey, watch your lane. That's
Yeah.
not your job.
Sure. It
I care about the lady too, but so I made sure it was a fair deal.
does it make a difference in this which state is handling? Because I know that some states have different rules on if it's a title close or attorney close. Because I feel like when I go in and I explain to the title company in layperson's terms what this deal is doing, we write it down, and then we are reviewing legal documents that say, okay, it does this thing that it says it was supposed to do. Um, I have seen some overstep by the attorneys who start representing one or more of the parties where they're starting to give advice. And I'm like, that's not what we're talking about here. I need you to take this layperson deal and turn it into legal documents. Is that going to vary by state? Because sometimes the way that they close is different. I mean, I've only done deals in a couple of different states, and they're usually pretty laid
So
back.
So the practice of law includes drafting documents. And so if you're going to a closing attorney, usually an attorney can close a real estate transaction in any state, is my understanding. There may be an exception, but attorneys can generally close real estate transactions. They may or not be able to issue title insurance. I think that depends on them making a relationship with an insurer.
Okay.
A title company, however, is only authorized to fill in the blanks or draft a deed or several categories of documents. And I'm giving general answers here because they do vary by state.
Okay.
But a title company should not be drafting documents. They
Okay.
may have templates on hand that they can fill in the blanks. Like I was just reading in Missouri, you're allowed as a title company representative to fill in the blanks only. You can't write any custom language. It must be a pre approved template that came from a Missouri attorney for you to fill it out.
Okay.
Otherwise, it's unauthorized practice of law. So asking them to draft it is not in their best interest for sure.
Hmm.
However, if they have an attorney that can do that and bring it back, that's fine.
Yeah, I think it probably depends on the state because I know the states that we've closed in, they have something called title attached attorneys with a title company attached to them. So we'll hire the attorney, but he also has a title company who handles that part of the
Yeah.
transaction. So maybe I
That's really common in Texas. There's
okay.
certain benefits afforded to attorneys in Texas such that they often own any title company is most often owned by an attorney in the state of
I,
Texas, in my
yeah, I think
experience.
also the state of Utah, we buy some property in Idaho, a lot in Texas. So that's probably why I'm seeing that structure. But I think it's important, like, because we sound like a little bit to the listener, like we might be getting into the weeds here, but this is
Yeah,
why
where are
this
we going?
yeah, this is why it's so important. It's because it's like who is handling the structure of the transaction? Because what happens, like you said, the devil in the details is where a lot of these things start to fall apart. So you can understand something at a higher level. But then when you get into the documents, what kinds of things should we be looking for when we hire an attorney to help do our doc prep? That we're like, wait a second, this isn't what I was expecting, or this isn't happening, or those things that are left out, because it's usually like two or three little things that add up. One thing can go wrong, fine. Two things go wrong, three or four start to go wrong, and the whole deal comes unraveled.
Yeah. And in creative finance, like I said, you have an entanglement. It can trip you up, and it can trip you up pretty bad sometimes. What you just said was basically my origin story for starting a company called Creative TC, and that's a little
Mhm.
over 3.5 years old now. It's not a title company. It's not an attorney firm. We just only touch the weird stuff. We're only doing creative finance transactions, and we are helping with the structure because when I first started real estate investing, I expected the title company to be the authority.
They're not.
The title company's job is to close the deal. Actually, let me put it this way. When you look at a box of cake mix, it's got instructions on it.
Yeah.
If you follow those instructions, you get what was promised. A title company is like the cook. You hand them instructions in the form of a purchase and sale agreement. You say, here's your instructions, Baker. Go make what I asked you. That's it. They just follow instructions. That's all they're supposed to do. And so if you're expecting more than that, you're up for a disappointment, or they're acting outside the bounds of what they're supposed to be doing. So when I first got started in real estate, especially when I got into creative finance, I was woefully disappointed that the title companies were not the experts.
Same.
It took me a minute to realize, oh, they're just here to close the deal. They don't care about me. They don't care about the seller. As soon as the transaction's closed, my name's Bennett and I ain't in it.
Yep.
That's what I got from them every time. And they wouldn't answer questions about, should I do this? Should I do that? They were not helpful. It's not their duty, and it's actually a liability for them
Yes.
to be helpful in that fashion. And so I started a consulting firm to solve that problem specifically for creative finance. I wanted to make deals safe, legal, and ethical.
Yes. And this is, I think, what we're kind of getting around to when it sounds like we're out in the weeds. It's like, who is on your team that understands what's going on here? Because you mentioned that you signed up for a mentorship. I did too, actually, early on. And he just did my first deal for me. I found the opportunity, but he
Okay.
structured paperwork, hooked me up with the attorney. But I quickly realized when I was doing the first one on my own without that mentor, I didn't know who to hire. Like, there's the attorney, like, how much of the title company? I was trying to get my head wrapped around who could help me turn this layperson deal that the seller and I had come up with, and then just trying to figure out how to make it a reality. So that's kind of what you're talking about is the
Yeah. Can I
translation.
make a shameless plug then?
Please.
Okay. I promise you guys, I'm here. I'm building what was not there for me. And what you just talked about, where you get conversationally, you got the bullet points with the seller. You've agreed A, B, and C. This is what's going to happen. Now what?
Yeah.
I built a service to solve that problem as well. We have a contracts drive-through. We're not attorneys. It's not unauthorized practice of law because we're not going to draft it. We have a template that's been attorney reviewed. We
Mhm.
help you get it done. But in general, you can draft your own contracts as a party to the transaction. And so we have a template. We pre-fill it with content and suggest it to you with edit permissions. And you say, yes, I want this, or no, I don't. You should have it reviewed by an attorney, but it's
Mhm.
a same day turnaround, $200 service to get your deal on paper so that you can go open escrow.
Okay. I love this. So you mentioned something else that reminded me. When I form a partnership, a joint venture partnership, whether it's creative financing or not, we have a partnership checklist questionnaire that my attorney gave me. I purchased this document that I can reuse with each partnership, and it's just a list of questions like, what are you going to do if someone dies, becomes disabled? How's the voting going to work? Who's putting in money? What are the jobs people are doing? And it builds out like a little cap table and some things like this. And then we take that questionnaire to the attorney who then translates it into a custom made operating agreement and legal document. But you also mentioned this partnership evaluator that
Yeah.
it just reminds me of what you mentioned, just because I have this questionnaire that we use for my attorney that helps us, like what you just said. Here's what we want to happen in this creative finance deal, put it in layman's terms, bring it to somebody like you can translate it, and then I can bring that document to my attorney. Saves a lot of money in attorney's costs to start out with a
Yeah.
partnership questionnaire. And it saves a lot of money in attorney's costs to start out with what you're doing, a couple $100. It's
Yeah.
gonna save a lot of time because they're charging by the
Yeah.
hour to start from
Yeah,
scratch.
the other problem was that it's hard to find a creative finance friendly attorney. Attorneys are the
Totally.
people who say no.
Yeah.
And I love you guys and I respect your knowledge, but when I come and ask an attorney a question, I'm asking you how, not can I. I'm
Yeah.
asking you how can I? And they'll
Yes.
say, well, you shouldn't and you can't because A, B, and C. That's not the answer I'm looking for. I respect that if there's a hard limitation. But when
Mhm.
I ask pressing questions, it's almost always, well, you could do it this way. Okay, then let's start with that then. I'm not looking for a no. I'm not paying for your time for you to tell me no. I'm paying for you to tell me how. So
Sounds like a
that's
risk
also
evaluation.
exactly what I'm trying to combat.
Yeah, for me, my attorney told me, he says, my job is to never give you a green light. You will never get a green light from me. He said, you will get red
Right.
lights and I give you a yellow. We know that's a path we can go down, but I'm going to explain the risks of that yellow light so that you
Right.
can decide if you want to try and go for it or not. And that was probably the best description I ever heard of how to make this happen. I think that's the same with financial advisors. They're going to tell you what not to do. They're never going to tell you, almost never, what to do. They can only tell you the pros and cons of this possible yellow light option. And a good attorney is going to do that well. The risk
I
evaluation.
agree. This is very similar to that fine line between, hey, this is policy, but this is what I'm actually going to do in this situation.
Okay.
I'm taking a risk. So we're very similar conceptually. These are the same type of conversations and evaluations. In fact, one of my early themes in the business was at Creative TC was I help people make informed decisions because there's a stink ton of information you don't know, a stink ton of questions you've never asked and you don't
Yeah.
know to ask that are specific to the state, specific to the type of loan, specific to the lender in question, um, the balance of the loan, the age of the loan. Gosh, I can go
Yeah.
through a whole list. And so all of those things, and it's devil in the details because every single one of those factors can have a cascading dependency effect on other items.
Okay. Yeah. Oh, no, I think that's a really good explanation. And that shameless plug, though. I love when I find products on the show that fill a hole that either I've personally been struggling with or I know is a general
Yeah.
hole in the audience, because that tells me that there's something there. Because we're not going to talk about it in like a 30, 45-minute podcast, all of the things that you should watch out for and all the details for somebody who has no experience. I
Yeah.
think what we're talking about here is how to find the people who do have experience and make sure that they know what they're doing so that you can rely on their opinion. So let's pivot into your partnership evaluator that you're talking about, because when we're going to put money in somebody else's business or somebody else's deal as a private money partner, I feel like this is so neglected in this space. We're talking to a lot about the people to try and start or run a business like this, tips and tricks, entrepreneur side. But we don't really talk about what the private investor or the private money limited partner needs to know before they're going to put money into a deal. And so, can you tell us a little bit more about that evaluation and how you can figure out if it's a good idea for me or not?
Yeah. And I used this on one of my partnerships, planned partnerships, and it proved to be true that I shouldn't have gone. Like, I ended up not doing it. I'm glad after the fact.
Yeah.
So it's a little worksheet that asks you mostly yes or no questions. And if you don't know the answer, which I'll bet is a lot of the time when you're considering a
Yep.
new partnership, you're supposed to put a question mark. And every question mark is actually probably a red flag. Like, oh, I don't know enough information about this person. I should go ask that. This. Do you know their credit score? Fat chance most private money lenders are not asking for credit scores from people. I don't even care if it's like freecreditreport.com or like my FICO score from their credit card free portal. I don't care. Get something. It's not going to be that far off. Get a current one. Do you know how much total debt do they owe? Oh, I don't know. How much cash liquidity do they have?
Yeah.
I have no idea. That they don't have any. That's why they're borrowing cash. And okay. Well, I have another saying to go along with that. I need to put this on a shirt. It's cool to do deals with $0 out of pocket. It is unethical to do deals with $0 in your pocket.
Yes.
You need
Oh,
cash reserves. And
yeah. And
that's
yeah.
part of evaluating a partner. And so it's like, how would you know I can trust them? I'm looking off the sheet now. The thing is, you fill this thing out, and it's got a link at the top. And I made a custom GPT. Drop it in. It's going to say red flag, red flag, red flag. Here's a script for the conversation you need to have. And if you're not willing to have that conversation, you're not willing to be a partner.
Yeah.
That
Well,
goes both ways.
yeah. Well, it's the same thing. It's like when we're doing like a background check on a partner or something, and I'll say, hey, we need to sometimes look them up on the FINRA database to see if they have any securities violations. And sometimes they have a normal name. And I say, hey, I need a little bit more information, maybe a birth date, social security number, what's your home address. And you can learn a lot about someone when they refuse to give you certain pieces of information. It's like, for
Yep.
me, almost like a little test. If I'm asking for data and they are refusing to give it for privacy, uh, are there any legitimate reasons that somebody would say, I'm choosing not to answer this, but it doesn't disqualify us from being business partners on the evaluator that you give? Is there any reason somebody could say, I'm choosing not to disclose this? That you would be like, okay, that makes sense.
Not offhand. That's
Yeah.
a policy thing. It's a policy thing. I would expect transparency with my partners. So if they're unwilling to give me a piece of information, generally it's an automatic no from me.
Okay. Yeah. Well, for me, I think that it's one of those things where even if they have a good reason for it, a lot of times it'd be like, my wife and I are going through a bad divorce, and attorneys are gonna like, you know what? I'm good. Like to me,
Yeah,
that's one of the situations that I want to not deal with.
I said this to someone who is divorced. Have you been divorced?
No,
This is an uncomfortable conversation.
I personally have not been.
Oh, okay, there you go. So it's an uncomfortable conversation, but a person who's been through divorce, by and large, we're profiling here. It's a risk decision.
Okay.
They're more risky than somebody who hasn't.
Okay. That's, I mean,
They
that's,
also have more moving pieces in their own life, which may cause them to juggle funds, which is exactly what happened to a friend of mine who lost $80,000. Money was being juggled between multiple commitments
okay.
during a divorce. And so
Okay.
it's a higher risk profile. If we're looking for cookie cutter candidates that fit within the mold, divorce is one of those things that is an increased risk level. It's not an automatic no for me. Absolutely. It's just, okay, this person didn't honor their commitment.
Okay. Yeah. I mean, true. But the money juggling that you mentioned, I interviewed, I don't know, 2 years ago, somebody who investigates white collar crime because he's a white collar criminal himself. And he basically got out of prison and now helps law enforcement detect fraud
Hmm?
in these things. And he said one of the biggest things is the funds juggling, illegal funds juggling, moving it from one deal to another deal when it's supposed to be in here, and you disclose one thing to your investors, but then you did something else, and you figured, I'll just patch the hole and then I'll fix it, and then I don't even have to tell anybody about it later because it'll all be fixed. Is that a big one that you see with the funds juggling? Because in creative finance,
No, not common.
it's not to be an issue.
No.
So it's mostly a part
It's
of,
not that easy between real estate deals.
yeah.
Uh, it's between business bank accounts is a
Okay.
lot easier.
Okay. So what kinds of things are we watching out for there? Because you talk a lot about ethical creative financing and ethical entrepreneurship. That can be a whole host of different things, but what are
Yeah.
some of the big ones we're looking out for?
Well, to touch on the ethical piece, one of my core values is care at the title company, and deals involve real people. Act accordingly.
Okay.
So I'm supposed to be impartial, so I can't necessarily advise people A, B, or C, but I can say, hey, these things must be true for me to touch this deal, for me to
Okay.
close this deal. Um, so what was the question? Asking about how to evaluate.
Yeah, ethics violations that make you say uh, that pause and either ask more questions or just say, you know what, I'm out.
So particularly in creative finance, which is all day, every day, what I do. If it's clear that somebody doesn't have a full understanding of the transaction, absolutely immediate red flag.
Okay.
Now, at my consulting company, I'll happily lose a client and say, this is the way, if you don't tell them, I will. I will blow up your deal and I will give your money back. Bye. Don't call me again. Right? I want people who are above board, not at the level. I want to work with people who are clearly communicating, because in every creative finance deal, there's a story.
Hmm.
And you can truly help people, but you have to understand the story to actually help somebody. So it's, if they don't understand clearly that their credit is still tied to the sub two deal, for example,
Yeah.
that, or if somebody's waiting to provide disclosures until later in the deal, like waiting until, I mean, imagine yourself as a seller who feels like they're being saved, and then they pack up to leave, but doesn't actually understand things, spends money to move and find a new place to go. This other person's going to take care of you and start taking your house payments over for you, so you don't have to worry about it. Uh, you didn't understand everything about it though, and then the full closing disclosures, or like what should have been signed at the beginning, is now in the closing packet when you've already started moving and all this stuff.
Okay.
Now it's like, oh, I can still get foreclosed on if they don't make my payments. Yeah. Oh, my credit's still tied to the loan if they don't make payments? Yeah. They don't have to pay it off ever? Like a, ahead of time? Nope, that's not what you agreed to.
Yeah.
That's not the time to reveal that stuff to somebody. Those things need to be signed up front.
Okay. Early on. And where do you come in to this process to say, like, here are the documents that you need to for a purchase and sale agreement to happen. So they already maybe have their purchase and sale agreement in place. Do you come in after that to say, let's make sure?
Yeah. So because I own a couple of companies here, I have multiple touch points. But one
Mhm.
of the reasons of starting a title company, which is the newer venture, is that my goal across the whole set is to be who wasn't there for me or build what wasn't there for me,
Yeah.
but also to make sure that the creative finance deals can be safe, legal, and ethical. So at the title company side, I can set the standard with a little bit more official angle to it. On the consulting side, I can catch things early and influence them for positive change. And
Okay.
so people would engage like you've got the verbal agreement. That's where you would engage at Creative TC. We can help you get the contract where we're trying to make sure it's written right. All the disclosures are there. And we're asking them, hey, how does this transaction work? And I want the layperson, the seller, to be able to explain what the transaction is. If they can't demonstrate an understanding, there's not a deal.
Right.
You know what I mean? And so
Yes.
we can help from that contract phase. Then that company also helps manage that. We're like project managers for your creative finance deal. And the title company separately is the closer of the deal. They facilitate the closing and provide title insurance. And that's
Got
in Colorado only, but we'll expand. But that's my grand vision, is to make creative finance safe, legal, and ethical.
Yes, because it's really not right now. And I think it's beyond most
You could
people.
just do stuff.
Yeah, well, you'll take a mentorship or something, or you'll listen to a podcast episode, and people sometimes get up in the romanticism of they want to do a creative finance deal because the people who do it sound really clever on the interviews or with the mentorship product that they're selling. And I liked what you said, like to keep it as simple as possible and only entangle or encumber as absolutely needed because each one of these entanglements brings a new relationship and a new set of risk. So you're starting out from the simplest, just pay cash for a deal, and you're just kind of working your way from there. We got to get this deal done. At a certain point, it becomes so complicated that the risk factor becomes like, and it's somebody like you who's going to be able to look at it from that angle and say, like, can we make this simpler? Or does it really need to be this complicated because somebody wants to feel smart or clever or impress their mentor? I actually see
Yeah.
a lot of that.
I've had plenty of conversations where I'm like, calm down, Tiger. This
Yeah.
deal would work way simpler in this fashion. Like, uh, you're trying to get a notch on your belt doing the deal. That's not the right format for this deal. They have to make that decision ultimately. But it is what it is. If I could pull one tip for evaluating partners,
Mm-hmm.
it's going to be, I want to know their story of having pulled through a difficult time, not when they bailed, not when they escaped, how they made it through a tough time. And that it goes back to that divorce question. That tells me a lot about their character. Now, they could be the victim of a divorce, but they could also be a participant. So you got to understand the story in a given situation. But I almost went out of business once, and I
Mm-hmm.
could have just wrapped up shop, gone and gotten a job and said, whatever. But I had people relying on me and we pushed through. I want that story from my potential partners. When have you almost lost it and you pushed through? You stayed committed to your goals, to the outcome, to the people around you, and you honored your commitments, even if it bled you. Tell me that
Okay.
story, or I don't want to part.
Yeah. One big one that I watch out for is just because this business, finance, real estate, investing attracts a lot of narcissists. And so I'm looking for somebody who's both the hero and the victim of the same story. Something happened to them, they did everything right, but then this still bad thing happened. I'm a hero and I'm a victim. And so that language to me is something I'm very attuned to because I see it so often. And the overcomplication is somewhat a sign of that ego, like calm down, Tiger. It's not going to work. We don't need to do it this way. Those are huge red flags to me. Just the attitude of
Yeah,
ego, narcissism, and victimhood, and we just see it a lot.
I
Well,
agree. It's one of when you've been around long enough, you can recognize it
yeah,
right away.
yeah. You spend some time with them studying it. It starts to become more apparent. I look at some people I did business with in the past where I missed those red flags. And now I'm looking at it like more informed and more experienced and like, oh wow, yeah, that was kind of obvious. I should have caught that one. And so that's now one of my personal big ones. I don't know if that's going to be on any partnership evaluator, but maybe it should be. But you're providing a really useful service, one that I wish had been there for me, despite having a mentor. So before we wrap up, I'm going to talk about like how people get a hold of the resources that you mentioned. Do you replace a mentorship program where people are learning the general techniques? Should they still consider maybe high ticket mentorship to really dive into this world? and then hire you as a consultant in the execution phase? Or do you think you kind of replace a lot of the need for that? Because where are they going to get the ideas from in the first place?
Eh, I would say more option A.
Okay.
Although every deal run with my team is like a mini mentorship for the consulting firm,
Mhm.
but you need some base knowledge to get there, right?
Right.
I don't have a mentorship. I don't intend to run a mentorship.
Yeah.
I help people make informed decisions. And so you need to go get yourself into a deal, talk your way into something, and we'll help guide you. We'll hold your hand and take you through it.
Got it. Okay.
So usually that means you're in some sort of mentorship. It doesn't have to be a high ticket one, but the other thing is when I was getting started, it was all 50-50 JVs. If you had a potential deal and you wanted to get it across the finish line, 50% off the top.
Yeah.
Well, and then, or they would insist on control and give me a tiny cut. And I'm like, I want the deal though. Well, it's not an option, buddy. Go do it yourself. I'm like, okay, nobody has a flat fee service to solve this. No, no one did.
But it's now they do. It's
Yeah,
fantastic.
now they do.
No,
Yeah.
if it just these little types of tools and things are so important. So how do people get a hold of the resources that you mentioned? How do they get a hold of you after the show? And some ones that when I forget to ask this question, my listeners will remind me that I forgot. But describe the type of person that you would like to talk to after the show. Like who's your ideal connection from going on the show? And then how do people get a hold of the resources?
Love it. Multiple points here. Okay. Number one, calebchristopher.io. I will, if it's not already there, I'll have my web guy put my partnership evaluator there. I also have a monthly newsletter where I share my real financials, profits, and losses. Sometimes when my rooms are vacant, I post negative numbers. That's real life for you. So calebchristopher.io is the primary. Then the title company is in Colorado, and that's creativetitle.io. And the consulting for just all of Creative Finance nationwide is creativetc.io. And we have free 15-minute consults there. Remember, I'm trying to be a lighthouse in the darkness here, warn you away from the rocks. And so we have free 15-minute consults for that purpose. I want to make real estate safe, legal, and ethical. And that's what
Yeah,
we're there to do. So
perfect.
it's
Perfect. Wait,
creativetc.io, creativetitle.io, and calebchristopher.io.
okay. Did I spell that right on this link? Creativetc.io?
That's correct.
All right, perfect. All right, perfect.
Well
I
done.
love the IO. It's like from our data science tech
Easy.
world.
Yeah.
Everything has an IO at the end of
Easy
it.
and consistent.
Yeah.
What was the other one?
You did calebchristopher.io, creativetitle.io, and creativetc.io. And then
No, the
describe
other
to me
question.
the ideal person.
Yes.
Why should someone reach out to you after the show?
I already got my investors for the title company. I don't need you. You know, no,
That was actually really good when that happened.
it does. That was amazing, and I love the people who have supported this vision. I would say if you're a wholesaler in Colorado, you're my target right now.
Right.
I want wholesalers and direct investor buyers in the state of Colorado. My focus right now, I've handed off management of the TC firm. My focus is title in Colorado.
Got it. If people want to get the creative services consulting, is that nationwide or is it state specific?
Nationwide.
Nationwide. Perfect. I'm telling you, if you want to get into creative financing, you need this. I have not used it yet. I would have if I'd known about it. It's the same thing where you get your docs in your setup and all of that right. You're going to save so much money at the attorney's office if you have your
Yeah.
ducks in a row. Like when we send our
Well,
partnership questionnaire and our attorney will be like, "Where did you get this? This is the easiest operating agreement I've ever done and cheap too because it was most of the work we did on the front end." So sorry, what were you going to say?
uh, I also don't like nickel and diming people. So I have a document library of hundreds of documents. If your deal requires a document, you can have it, right?
Got
We
it.
don't, it's just included. So if you're doing a wraparound mortgage or a lease with an option to purchase, and we have the document, if we've built one before, remember, we're not attorneys, so you're supposed to have one. But if we've done 90% of the work, they're just checking and they have to find something to circle to be able to justify their billing. But it's like, yeah, I'm not asking attorneys to originate documents anymore
Yes.
because from scratch, it takes them forever to understand all the things. And I've been through deals and I just update documents and I provide, hey, here's the updated template that we're using now. Have your attorney check it.
Yes. And that's so useful because that's where my attorney specialized in creative financing in my state. And he had a document packet that he sold basically as part of that service. And I could reuse it again
Yeah.
and again and again. And then I would keep bringing the deals back to him. He's retired now, so I need a new guy. But the document packet is still relevant. They're not legal documents. It was more like questions to ask, and then he could translate that into a legal document. So super, super useful. I'm really glad that you came on and talked to us and talked to the listeners. And if you are a private money partner, this is just as important for you. You need to know who they're using, that they know what they're doing. Like you need to partner up on the business kind of on the front end to make sure it's being done correctly. And then you can sit back and kind of collect the passive income with some light monitoring. Nobody's asking you to swing a hammer or anything like that, but be informed on the front end. And hopefully the guests that we have on the show, like Caleb, will kind of teach you what you're looking for there. If you need to reach out to anybody on the show, again, I've had, I don't know what we're up to, 150 something guests. You can reach out to me at investwithemma.com. That is my calendar link if you want to discuss anything real estate related, if you want to invest with us in our fund, or if you just need some advice. And not, I don't give advice, I'm not a financial advisor, but you need a direction or an introduction into somebody that can help you, that specializes in what you're looking for. I can introduce you to. If I can't help you, I probably know somebody who can. So thank you for listening. I really appreciate you spending your time with us. The time that you invest in research is going to pay off so much later in the execution phase. But remember that research has to eventually end, and you do need to get to the execution phase if you ever want to have more adventures that you pay for with passive income. Hopefully, if you could dream it, we can help you figure out how to pay for it. Thanks to you for coming on, Caleb, and we will see all of you next week for our next passive income adventure.